You've seen the headlines, right? Gold prices are just going through the roof. They're smashing records, and pretty much everyone is asking the same thing. What is actually going on? Well, over the next few minutes, we're going to break it all down, the big forces behind this crazy surge, and what it all means for you.
All right, let's just dive right in, because it turns out that all that advice we've been getting for years about buying gold, yeah, there was probably some serious wisdom in there.
For so long, a lot of us probably just brushed off gold as this boring, old-school investment. But the numbers we're seeing now are telling a story that's pretty hard to ignore. It's the kind of data that makes you sit back and think, maybe I should have listened to my mom after all.
And just look at this chart for a second. The difference is absolutely wild. While the Nifty 50 stock market index has basically been flat, gold has just taken off, delivering a massive 63% return in just the last year. I mean, it's not even a fair race. They're playing two completely different sports at this point.
And you might be thinking, okay, that's just a one-year thing, a fluke, but it's really not. When you zoom out and look at the last 5, 10, even 20 years, gold has consistently held its own against the stock market. And often, it's done even better, all while being a much, much smoother ride for investors.
So this amazing performance just leads to the biggest question of all. Why now? What on earth is happening that's causing this surge? Is it just a bubble, or are we seeing something much, much bigger unfold? Well, the answer has to do with some very, very big players.
Okay, this is where we get to the real heart of the story. Because this gold rush, it isn't really being driven by everyday people like you and me. Nope. The biggest players on the world stage, we're talking entire countries, are making huge moves.
I mean, just take a look at these numbers. The world's central banks, the big financial institutions for countries like China, India, and Russia, are on an absolute buying spree. Just between 2022 and 2024, they've snapped up over 3,200 metric tons of gold. This isn't just investing, this is strategic stockpiling on a historic scale.
So this intense buying just begs the question. For as long as most of us have been alive, the US dollar has been king. It's been the center of the financial universe. So why are these massive countries suddenly turning away from it and running back to gold, the oldest money in the world?
Well, this timeline really tells the whole story. It started in 1971, when the U.S. cut the dollar's tie to gold. Then came the 2008 financial crisis, which led to a ton of money printing. And the final straw for many countries was in 2022, when sanctions were used to freeze Russia's reserves. All of this has created this deep distrust, and now nations are searching for an asset that's safe, an asset that no one country can control. And that asset is gold.
But hold on, because the story of precious metals in 2024 isn't just about gold. Its often forgotten sibling, silver, has its own fascinating and maybe even more explosive story that you need to hear.
See, here's the thing about silver that's so different from gold. Most gold is just for jewelry or investment, but silver? It's an industrial workhorse. A whopping 65% of all silver is used in things we absolutely need: solar panels, electric cars, smartphones. What that means is, even if the price of silver skyrockets, these industries still have to buy it. They don't have a choice.
So how can we figure out if silver is a good deal right now? Well, there's a really simple but powerful tool that traders use. It's called the gold-to-silver ratio. And all it does is tell us how cheap or expensive silver is compared to gold.
So, for most of history, it took about 67 ounces of silver to buy 1 single ounce of gold. That was the average. But today, that ratio has just ballooned to 92 to 1. That's not just a small gap, that's a massive shift from the norm. And for a lot of investors, a signal like that screams opportunity.
And this big gap leaves us with a really interesting puzzle. Is this a sign that silver is just incredibly undervalued right now? Or maybe gold has just gotten too expensive? History tends to show that when this ratio gets this out of balance, something has to give. And often, that means silver's price plays a very aggressive game of catch-up.
All right, so we've looked at the global picture. We've talked about central banks and industrial demand. Now, let's bring it back home. What does all of this mean for you, and how can you actually use this information for your own investments?
So you basically have two main options here: physical or digital. Physical gold is amazing. It's something real you can actually hold in your hand, but you've got to store it safely and you've got taxes to think about. On the other hand, digital gold is just incredibly easy, super low costs, and you never have to worry if it's pure or not.
And honestly, Getting started with digital gold is so much easier than it sounds. You just need a demat account, which is just an investment account. Then you search for a gold ETF, just like you'd search for a stock, and then you buy it. You can even set up a regular investment plan to build up your position over time. It's that simple.
So, what's the most important thing to take away from all of this? It's to stop thinking about gold as a way to get rich quick. Instead, you should think of it as insurance. It's the ultimate insurance policy for your entire investment portfolio.
So, how much should you actually own? Well, a really good rule of thumb is to tie it to your age. If you're in your 20s, maybe starting with a 10% allocation is smart. As you get older and closer to retirement, you might want to bump that up to 15 or even 20%. It's all about finding that right balance for you.
But look, let's be totally honest here. Gold is an incredible tool for protecting your money from things like inflation and market crashes. But it's not a magic wand. It doesn't pay you dividends or interest. Its price can stay flat for years. Its main job isn't to make you rich. Its job is to be the stable foundation that the rest of your portfolio is built on.
And that brings us to our final and maybe most important question. Is this whole gold rally just another cycle, something that comes and goes? Or are we actually watching the early days of a massive, fundamental shift in how the entire world's financial system works? With central banks buying like never before and trust in currencies fading, the real question isn't just about the price of gold, but what it means for the future of money itself.